Welcome back to the series, Dollars and Cents, making every cent count. I'm your host, Adam Kazanik, Senior Wealth Manager with Convergent Financial Partners. So glad you're back with us. Today, we are going to dive into building an emergency fund. Why is that important? And let's make sense of this high yield savings account, right? That everybody keeps talking about. What's it different between that and regular savings? So first and foremost, emergency fund. What's it for? Why should you have it? I'm going to tell you a quick little story that actually happened to me. A couple of months ago, I decided I was going to go a beach vacation with my family, having a great time out in the sun. And as I'm walking out with my 3-year-old of the water, stepped on a stingray. Yep, a stingray. Not a jellyfish to some of the people I've told the story about. Imagine the stingray. That barb got me good. Sliced my ankle open, had to be carried off of the beach, ambulance, hospital, stitches, whole 9 yards, right? Not fun. Reach out. I'll tell you more details about it too. But the most important thing is now I need to get my insurance involved. Now I got to pay for these bills. That's exactly what an emergency fund is for. So glad that I had it. Now, how much should be in the emergency fund? Well, you know what? There's no going rate for a stingray injury, right? So we don't want to price it off of what happened to me or price it off of what could occur. The best way to look at it is your conscious spending plan. What are you spending on a monthly basis? And let's use that as a base factor or a multiple of how much should you have in savings. So I'm coming up with just random numbers here. Let's just say that you are spending $4,000 a month. All right. That's everything. That's all in. Maybe you can include the 20% savings. Maybe you don't want to. Totally up to you. But you really want to cover what are you spending on a normal basis? At a minimum, your needs, right? How much on a monthly basis are you spending on your fixed needs every single month? Take that, multiply it times, and I'm sure you've heard this before, 3 to 6 months. I like to go a little bit deeper. I'm going to give you a little bit more extra than the generic resources that are out there online. Think about your income. Is it consistent? Are you paid on a salary? Or are you in a more sales, commission, bonus type of role? Does your income go up and down? My general rule is going to be if you have a household income that you are able to live beneath that cash flow and you're paid on a salary that's pretty consistent, you can err on the side of maybe 2-3 months, right? Maybe if it's a little bit less than you think and it's not going to let you sleep well at night, bump it up to 4, bump it up to 5, totally up to your discretion, but you can get away with a little bit less. If your income is a little bit more seasonal, it's a little bit more up and down from month to month, and maybe some months you earn close to what your expenses are, and some months you're well exceeding what your expenses are, you may then want to err on the side of a little bit more multiple, right? Maybe you want to have 5, 6, 7, 8 months of your monthly expenditures in savings, because if something happens and you have a big expense and then you also are a little bit slow in work, or if you were like me where I had to stay off my feet for the next month and a half to let this ankle recover, it didn't keep me from necessarily working as much, but it definitely slowed some things down because I couldn't normally stand as I used to and be out and about. Had crutches for a little while too. So you want to make sure that you've got a sufficient amount of savings or emergency funds set aside for you in your situation. Hopefully your cash flow and my explanation of kind of how your income ebbs and flows helps give you a little bit more confidence. But again, you're looking for a number that's going to allow you to sleep well at night. Now, where do we put that emergency fund, right? I get this question all the time. Do I just use my savings account at the bank? What about these high yield savings accounts? What's the difference? How should you evaluate them? I'm going to give you the easy, foolproof way to figure it out. So regular savings accounts, these are going to be what you will find adjacent to your checking account. These are going to be at the big banks, the ones that have brick and mortar ATMs and buildings that you can walk into. There's pros and cons to utilizing a savings account at these big banks, right? You can go in, you can talk to somebody, you can build a relationship with those individuals. But the flip side is you can find much higher interest rates at the high yield savings accounts, right? So let's compare the two. Regular savings accounts, they may give you 0.1% interest. I've seen as high as maybe 0.5% interest, right? It's not really going to excite anybody, but they're there. They're linked to your checking account. It also is set up so you have some basically built-in overdraft protection. If you're somebody who maybe gets overdrafted in their checking account, may be good to have a checking associated that they'll pull from so you don't have any of those fees. Downside with those traditional checking accounts is the fees. You may have a monthly fee in there, so it's important to understand How much money do you need to keep in that savings account so you don't have any servicing fees charged on there? That a lot of times will deter people from utilizing traditional savings, that in conjunction with the low interest rates. So you're not going to get a lot of growth. You're really going to get it from an accessibility standpoint where you could go in and withdraw cash out of the savings account. But let's be honest, that convenience doesn't really make a lot of sense. Why do you want to go and go to the ATM and be able to pull money out of your savings account if it's for savings? It's for that emergency or that rainy day. So most people now, I think, have caught on. They like the high yield savings account. Let's compare and contrast. High yield savings right now, you can get roughly maybe 4 to 5% interest, right? We're middle of the year 2025 to give you frame of reference. So we're talking maybe 10 times the amount that you could get or more in a regular savings account. But what's the catch? Well, the catch is that you're not going to have an ATM associated with it. It's going to be probably connected to a credit union or an online bank. Well, if you're like me, somebody who really doesn't care about walking into a bank all the time to deal with somebody face to face, then maybe an online bank and a high yield savings account could work for you. So think about that. And if you're responsible with your cash flow and you've got a conscious spending plan and you're not needing to dip into the savings a whole lot, I think a high yield savings account could make sense for you. You don't need to be walking into a bank all the time just to make sure it's there. Go online, check your app, piece of cake. There's a lot of different online banks out there. And the other advantage to what I found with online banks and the high yield savings accounts is there's no fees. There's no servicing fees or account minimums that you have to keep in there before they start charging you. Now, there could be some thresholds of you get more interest if you've got above a certain amount of income, or you may get a lower interest rate if you have a balance that drops below a certain threshold. So it's important to know what those are going to be for that bank account before you open it up. Just be aware of them. The other piece of it is, you may not have it tied to your checking account. So if you like to have everything in one institution, that's fine. You just want to weigh those different options and see what makes sense for you and your emergency fund. Next is going to be, what should be the next step? The next step for you should be if you don't have an emergency fund, start building it up. You're going to hear different talking heads online around how much you should have in your emergency fund and then what should it grow to. The answer is what works best for you and your financial personality. Are you a spender? Are you somebody who really needs to be forced to save that emergency fund? Are you somebody who is a worrier, who's always worried about saving the extra dollar, who's maybe got too much in savings and maybe needs to think about the high yield, or maybe needs to think about starting investing? So you want to figure out what is going to work best for you. What is the best type of savings account that's going to allow you to sleep better at night, and utilize your conscious spending plan and figure out what's the multiple that needs to be sitting in your emergency fund. Hope this helps. Looking forward to seeing you on the next episode. We'll talk soon.